Welcome, everybody, to another Conscious Investing. We have August the 24th today, Monday, as usual, 6 p.m. Pacific Standard, as we always meet. I'm over reporting live from our Burnaby office at Rennie, having a lot of fun over here, just analyzing deals as I always do. And we're just really happy to have everybody here. For anyone who's new, this community is really about education, about connection, exploring different ways that we can build wealth a lot more consciously. And so we talk about everything from real estate to crypto, alternative investments, tax strategies, creative strategies, insurance, and most importantly, we try to understand the why behind why we're investing rather than just simply following what everyone else is doing. And so tonight is going to be a fun one because we're going to be talking about deal or no deal. And I'm going to take you behind the scenes on how I actually analyze real estate investments. So we're going to be looking at some real examples, some real properties, running the numbers, and then you can decide if it's deal or no deal. But first, let's talk a little bit about crypto because there's been a lot that's happened in the market this last little while, which I'm really excited to share because we don't see this all the time. And as you guys know, Mehdi, our money Mehdi, is away right now celebrating his 40th with his family, and he'll be back in a couple weeks. So we're just going to be doing a really brief overview today. Some of you guys have been in this community for a while, and crypto, yeah, has really made an impact this last little bit. And Bitcoin in particular had some really strong gains. It gained more than 20% this last week. And so what's particularly interesting isn't just Bitcoin, but it's particularly interesting what we've seen across all platforms. So other coins, Ethereum, Solana, XRP, Chainlink. I've seen a lot of action in our group chat as well. If anyone who's on this chat today has any other insights as well. I know there was a lot of excitement, especially about Dogcoin. Some of us that have been coming to our conscious investing community for years now, we've been invested in a few of the various coins. And as for fun, we like to keep tabs on how our coins are doing. So it was particularly interesting to see that Dog went up 40%. I think that Todd said in our chat. So that's really exciting. And also Dogecoin. So Doge has gone up, and then also Dog Go to the Moon. That's another one that I know we were into. And some of the smaller, more speculative coins like have experienced even larger percentage gains. So why is this happening? What are the things that's going on right now? One of the things that I noticed is around institutional money. We're continuing to see that institutional capital entering the crypto market through all products. So such as Bitcoin, Ethereum, ETFs. That's really important because crypto isn't operating entirely outside of the traditional finance anymore. So traditional finance institutions are increasingly participating in this, which is really exciting. It's becoming more popular. And also tokenization. This is probably one of the developments that I'm most interested in personally. We're watching the more traditional financial assets increasingly move onto blockchain infrastructure. And I know I've been talking about this for years. We have had live in-person meetings around this. And what's really exciting is that these major financial institutions are experimenting with and launching tokenized financial products. And so I really think that it's something that investors, especially us in the conscious investing space, should pay attention to. The conversation then becomes much bigger than will Bitcoin go up? And it's like becoming more of like, okay, what role is this blockchain going to play in the future for our financial system as a whole? Which is really exciting. And I know a few weeks ago, we had our friends, Nicholas come on, and he was talking about it because we can do Bitcoin backed loans. And my other friends there, who are in the Bitcoin space, we had a more broader conversation around the blockchain that's going to be in the financial system and how we're moving towards that. Even what was it, a week or two ago around Trump initiating that as well. So there's a lot of movement happening in the crypto space, in the crypto world lately, short liquidations as well. So another thing that happened during this rally, a lot of the traders were betting that crypto prices would fall. Okay. So when we're betting on crypto prices falling, what happens? People want in. And so when Bitcoin starts moving rapidly in the opposite direction, some of those positions were forced to close. So that creates additional buying pressure and can actually accelerate the move, which is really interesting, which takes me to my further point. The money moves further out on the risk curve. So when we often see something like this, it's when Bitcoin moves, then Ethereum, and then the larger altcoins. We've been talking about this for years, because a lot of us are invested in different altcoins, as we know. And a mark that we've always talked about since the beginning was once we see the larger coins go, like Bitcoin, as stable coins, Ethereum, Solana, now we're going to see the larger altcoins go. So eventually the money starts flowing into the smaller, more speculative assets. And that's why you can see these larger jumps, like the 30, 40, 50% moves. But, and this is important, something going up 40% doesn't actually make it a good investment. So the momentum and fundamental value are not necessarily the same thing, if you know what I'm saying. So if you go to Coinbase, CoinGecko, you can follow it and it gives you more information about that. I'm not going to get into it, but I was reading up on that today and I thought that was really interesting. So you can look at the biggest crypto gainers and losses over the last 24 hours, as we've seen time and time again over the years, 7 days, 30 days, different time periods. So basically, that just gives us a perfect transition into tonight's talk, because here's something that I want everyone to remember. Price is not the same thing as value. So a crypto asset going up 40% doesn't automatically make it a good investment. And a Vancouver property that could be selling at, $200,000 cheaper than it was a couple of years ago doesn't automatically make that a good investment either. Does that make sense? So our job as investors is to figure that out. And that's what we're going to talk about today. So does the opportunity actually make sense? So in the Vancouver market, as you guys know, I am a local realtor and also investor. I've been investing in real estate for over 15 years now, I want to say. And also just a long time investor, curious about investing, very diversified, and surround myself with some incredible people who love to learn about investing in all asset classes. And so that's what we're going to learn about today, is around the real estate market in and around Vancouver. And so I'm just curious, for those of you who are on the phone, I see Dylan, Leanne, Cheryl, Amandeep. Are any of you guys, and Michael as well, are any of you guys invested in the Vancouver market at all, or British Columbia real estate market? Just feel free to pop that into the chat. If anyone's currently invested in the Vancouver market or in the British Columbia market. Yes, no, I don't know. Should I? Well, that's what we're here to see. Is it also comes own my own condo. Okay. Love that. And that's what we're here to talk about. I wanted to really break a few different product styles down as well and show you guys how exactly I analyze like a deal for you. Because I want to make sure that you're making a smart investment. I've had a lot of clients come to me lately and they bought in 2022. They bought what they thought was an investment property. And it wasn't with me, but it was with other realtors that didn't go and analyze the property fully. And that's something that I really want to give you guys independence. I really want you to understand how to properly analyze a property. That's one of the biggest things to figure out if this property is going to work, not just for your budget, but if you were to purchase this property as an investor, or here's something that I talk with a lot of my clients about is looking at the budget for while you're in the property. What is that total dollar amount? That's something that I think we should all be doing regardless. But aside from that, when you exit the property in like 2 to 5 years, what does it look like from an economical standpoint? What's your ROI? What's your cash flow? What does that look like as a long-term asset? Appreciation and cash flow, ROI, right? These numbers need to make sense. And if there was ever a circumstantial change, that's another thing that I do talk about with my clients is if you move into the property and there was some kind of a circumstantial change, you had a job transition. As you guys know, we have the anti-flipping rules here in BC now. So unless there is a circumstantial change beyond like what you would have anticipated, it could be anything from like a job shift or change, job loss, and something major like a health issue or a loss in the family, right? Something that would really need you to move from that property. Can this property sustain itself? Right? And so that's what we're going to get in today. I just really want to set you guys up for success. A huge part of what I love helping is just liberating people and start to build their portfolios. And whether it's in stocks, whether it's in insurance, whether leveraging your insurance, let's say leveraging, as we were talking with Dean and Dan last week, leveraging your infinite banking, borrowing against, pulling out the money, plunking it down on a property, getting some assets there, diversifying over into stocks, into trading, into crypto. It's really about who we surround ourselves with to learn about this. And as you guys know, before I got into real estate, as some of you may or may not know, I was a high school teacher. So I'm really big on education and learning about taking the time to learn about all of these investing strategies. And I understand you guys, we live in a really high-paced world right now. It's really fast paced. We want instant gratification. We don't really want to learn about everything. And especially with AI, we just think that AI can do a lot of it for us. And don't get me wrong, it's an excellent tool, but there's so many nuances that only someone who is a long-term investor would really be able to strategically understand that. And as you guys know, real estate's my game. It's my passion. I absolutely love it. I love helping first-time home buyers. As you guys know, I have my Rents to Riches, which we're going to be starting up next week. Next Wednesday, it's going to be going for 6 weeks. And it's really near and dear to my heart. When I moved to Vancouver from Alberta, I noticed a common theme, and that was not a lot of people had their own property. In Alberta, we all, for the most part, a lot of people have their own property. And I understand that the market has been inflated within the Vancouver market. And it has been really difficult for a lot of people. And I get it. I have a soft spot for a lot of renters. And so for me, that's really why I created the Rents to Riches course, was because I wanted to give people that plan, that structure, and the tools that they need to get their first property. So whether it be like in the next month or in the next 5 years, I really sat down and did a thorough analysis on why people are not getting their properties and how to get that. And so now we're just going to jump over to the Vancouver market. Right now, I get it. There's a lot that's on the market, which can actually be really exciting. And right now, I'm really super, super excited for first-time home buyers, and I am excited for investors who want to team up with first-time home buyers. And I know a few weeks ago, I do, various talks on investing in real estate. I was talking about joint ventures. Was anyone who's in the chat today, were you guys at my JV and partners session? If anyone was on the JV, if you're not, or if you haven't, check out our YouTube channel. Um, we have someone in the background today who has been diligently helping us with that. Michael, I don't know if you're there, but um, he has been helping us tremendously in getting our YouTube channel up and running. So thank you so much, Michael. And also, for anyone who is in the room who hasn't liked and subscribed to our YouTube channel, I'm just popping it in the chat right now. Please go on, like and subscribe. All of our content is uploaded, and you get to learn about so many different ways to invest. And the cool thing is that we're doing it consciously. I'm doing it in a thoughtful and mindful way. That's a no pitch place. This isn't me up here trying to pitch you guys on something, or I make sure that I source people out that are my keynote speakers that are going to lead with intention and that I trust. As you guys know, I'm also in regenerative real estate as well. So I have some really cool projects where people are investing in places that actually help heal people and also help for the investors to know that their capital is going to good use and receiving ROI. My tagline is where profits meet purpose. I come from an investing background. I used to be a managing partner for an investor-focused real estate team and a longtime investor myself. And now I'm all about helping others to create spaces where they can heal, whether it be a wellness like a wellness retreat, a yoga studio in the urban centers. It can be a beautiful co-living space in community. As you guys know, I talk a lot about co-living and community a lot, community builder. And so I love having all of this beautiful content on one space, which is on our YouTube channel. So please like and subscribe. And back to the Vancouver market. As you guys know, as I mentioned, there's a lot of there's been a lot of a really big correction in the market. And that's actually really exciting for a lot of buyers. This is why I get so lit up in this time, you guys. I just I can't speak to it enough. Please, please, please check out my Rents to Riches program as well. I'm going to be starting that up on Wednesday. So if you haven't already registered for our Rents to Riches, I'm going to pop that in the chat as well. And all you need to do is register on the link, and then you'll be able to get into our Rents to Riches community. And then I put the link in there. Just gonna pop it in right now so that you guys have it. And then please, please go into the community, and then you can get the link to go into the Rents to Riches. It's a free program, you guys. I do this out of the goodness of my heart to help renters get their first property. And I have my whole power team on there. It's a pretty extensive and incredible workshop that I have on Wednesdays. And it's every second Wednesday, and it's for 6 sessions, but it's going to be starting in the fall. I always do it. We start right after the long weekend. And so whether, like I said, you're looking to get a property within the next month or in the next 5 years, this really sets you up for success. And I also record it all, and you receive free copy once you complete it. So even if you miss a day or two, it's something that I do gift you as well. So please join the chat as I popped it in there. But back to opportunity. So right now, as I had mentioned, the market has been adjusting. I know there's a lot of naysayers out there right now, but I am so excited about this market because this is the first time where first-time home buyers are able to purchase a property with as little as $20,000 down. And you also are paying on a monthly basis the same as what rent would be, or maybe even cheaper. So if you have $20,000, you should be getting a property right now. If you have a full-time job, you should be getting a property if you don't have one right now. This should definitely be a time where you should be thinking about that. And I'm going to show you guys some examples. So how to analyze a deal. What am I buying? Right? These are questions that you guys, need to think about. What's the asset? Where's the location? What's happening in that neighborhood? What's the condition? What's the age? What's the layout? What's the rental demand? What's the future look like for what we know in that area? Is there future redevelopment potential? And here's one question that I really like. Would I still be comfortable owning this if the market didn't appreciate for 5 years? Now, as we know, I don't have a crystal ball. We don't know exactly where the market's going to go. But what I do know is that it does come down to location. And we do know right now that the best locations that we thought we'd never be able to buy into have come down substantially, right? And I know a lot of people in the past thought, oh, Vancouver just goes up indefinitely, and that's just simply not the case these days. But like I said, super exciting. And so the purchase price is only the beginning, you guys. I want you to know your total cost acquisition, right? The purchase price, the PTT, GST, legal fees, inspection, financing costs, renovations, furniture. But ultimately, how is your cash actually going into this investment? Right? I really want to take the time to go through that so that you know what your return looks like. So, how much money does it make? That's an important part of this whole puzzle, right? You want to know like all the questions about like the income portion of it, realistic market rent, what do I hope that someone is going to pay? With the advances in AI, honestly, you guys, it has like, this has helped us to be able to analyze the property way more. There's a lot of nuances to it, especially with things that I know, just like the wisdom that I carry from doing this for so many years. And so, but to get some examples of things, I actually love to use AI. I use ChatGPT, like for market rents, for example. I say, what's an average market rent for, we're going to be looking at a deal pretty soon, but I just go into ChatGPT and I ask, okay, on average, what would a two-bedroom in this kind of a suite, give all of the details to it? What would I anticipate to make on a monthly basis? And so it tells you, or what, if you want to get a roommate I'm going to show you guys a two-bedroom in Yaletown. And what would renting out one bedroom look like in like this specific street? So it's nice because you can get all of these sort of details when typically you wouldn't have. So I'm just going to share my screen so that you guys can see what it is that we are looking at, and going to go through the analysis as well. Alrighty. So here we are. Now we're gonna look at this first, okay? It's a $1.5 million property. And the reason why I like this one is because of the location. It is in a primo location just here. This is in Mount Pleasant, you guys. So fantastic location. And, it's a duplex. So the reason why I've invested a lot in duplexes personally is because you can get them freehold without any strata fees, whether it be here or, I mean, I also know that the Alberta market quite well. I am from Alberta. Most of my portfolio is there. And a lot of what I've built is based on duplexes. The reason being higher cash flow, and cash is king. And we're talking about analyzing various properties. So here with this one at 1.5, the thing that I also love about this one, you guys, is that it's like stunning. It's done up so nicely. It has a beautiful yard, a beautiful patio, but look at the interior finishings. Like, look at this waterfall island. It's super sleek, very chic. I mean, I probably would have chosen different furniture, but the finishings are really nice in this one. And it looks like they have a beautiful kitchen. A lot of like natural sunlight, a lot of lighting. It just looks really well done. And then the upstairs as well. Brand new finishings as well, bathrooms done up. Everything's just like redone on this one. So it's nice because for 1.5 in like an incredible location, and you also get that mortgage helper. So this is two suites. This is two suites. There's one on the top, one on the bottom. That's the second one right here. This is the secondary suite. But yeah, done up really nicely. This is the layout itself. It has two-car garage. In total, it has one, two, three, four, five bedrooms. It also has like one bathroom downstairs with the kitchen, living room here. Upstairs, two bathrooms, three bedrooms, perfect for like a small family and like a nice large open space. These guys can go down the stairs and then also access the patio, or you can have it so that maybe you move into the bottom here because the bottom here looks pretty bougie and it has a beautiful patio. So it depends, if you have kids or not, or if you're looking to, like, if you wanted to have a larger space with more people. So that's it. Yeah, like I mentioned, the thing that I love about this is that, for 1.5 mil, you get a lot of space, just shy of like 2,000 square feet. And yeah, five bedrooms as well. So we're just gonna have a look and analyze this one, right? 1980s build, so not too old, just like that sweet spot. So here we are, 1.5, we put it in, right? 1.499999. And the reason also why I like that 1.499999 is because you can also put down less than 20%. So this was a newer change if you qualify, of course, right? But this was a recent change. And the reason why I know the number sounds big, but because there's a mortgage helper, and if you actually lived in the mortgage helper, then you can make way more on the top rent. And then you can live in the bottom with that sick patio and that waterfall island and just like have a really good time there. And if you can qualify, or remember, as I was talking about a few weeks ago about JVs, joint ventures, if you haven't seen that one, go to my page, my YouTube channel, and go check it out. Because then you can learn how you can team up with other people who would love to have some equity in one of these places. And you can utilize your first-time home buyer, being a first-time home buyer, and you can also add in there the fact that you are living in the property as well. So here we are, legal fees, $1,500, home inspection, give or take around $650. Contingency. So you can put some into the contingency if you want. The contingency fund is just if you are wanting to spend any money on this. It could be anything from like furniture to, just putting some money in there. A lot of people do put some money in there. I'll put in like, $2,000 just so that there's something in there for now. Ideally, you want it to be 1% of the purchase price. I think that's a bit too steep given the nature of the property that it's been completely refurbished. So a lot of what's in there is brand new anyways. We'd have to check at the mechanicals. So land transfer tax, unfortunately, yes, you still have to pay that. If you're a first-time home buyer and it's less than 800, then you can avoid that. But for the sake of this one, that's where it's at. Furnishings, if you wanted to furnish the place as well, we can always add that in there. But if you have your own furniture, or maybe we can get it so the furniture is included in the price with the furniture that's in there. You never know. But yeah, so with this, okay, so how it works, you guys, and this is important, from $0 to $500,000, if you qualify, it's like 5% that you need to put down as the deposit. From 500,000 to $1,000,000, or sorry, they just increased it to 1.4999999. It's 10%, right? So 10% on the million and then 5% on the 500,000. I just put 10,000 or sorry, 10% because just to make this easy, but it would be like 8.7% or something like that. That would be like the total amount because it's only 5% on the first like 500,000. So your total down payment is 150,000. But let's say it was 8.7. Yeah, so that would be 130,000. But for today, I'm just going to have even numbers. I just want to have even numbers on there. And keep in mind, you guys, just because the price says 1.5 or 4,999 doesn't mean that that's what we get it at. We can negotiate in a lot of instances down from the price these days. We're in a more of a buyer's market, as I've talked about on previous sessions. So yeah, just kind of looking at that right now on a 30-year amortization. Amortization is the total length of the mortgage. We'd be looking at a 3.6 is what we can roughly get it for right now. And you're getting it on a variable. Your monthly payments are going to be just over 6 grand. Okay. But keep in mind that how we're renting it is from the top floor. And this is from ChatGPT, that the top floor we could probably get around 4,000. And then for the bottom, it's like 3,000. But if you decided to live in it, then just keep in mind, probably get a roommate, and then that's what your monthly payment would be, right? And then also, what is the overall costs, which we're going to analyze in just a second. So here, yeah, 2,900. I put the taxes that I put on this one. This is taken directly from the listing. It's $5,233 insurance. And then here, I didn't fill any of this part out because it depends if you decide, how we usually distribute the utilities is like, either 1/3 and 2/3 or 1/4 and 3/4 or 50/50. However you want to just like, and you can either do that or what I do with my places is I actually add that in because I realize what are my overall monthly costs annually. And then from there, I actually just add that into my rent and then have it kind of on a separate addendum saying that this is just a monthly cost. So it's a flat fee. In other words, it's a flat fee. So yeah, you can put that in there. But here it shows you that, just for the rental component itself, if you were to rent it out for the 2,900 and then 4,000 for the top, then you'd actually have a total profit every single month of $214. So if you decided to live in it yourself and you lived on the bottom part, that's 2,900, you could actually pay 2,700, let's say. So you change this part here, say you're paying 2,700. Then what you would do is if you wanted to get a roommate, you could rent out a room, let's say for like 1,200 or so. So actually what I would do is so if you rented it out for 1,200 a month, then your monthly payments are only 1,486. So 1,486 a month to own your home and you're renting out the other parts of it. But $1,486 for you to live in your own house. I mean, that sounds pretty good. I don't know. What do you guys think? Does this sound like a good deal or does it not sound like a good deal? I'm curious. Todd, I saw that you popped in here. And I don't know if you've been listening, but I was just going through different deals. And this one that we're looking at right now is a house that's over in a really good area. I don't know if you saw the area, but it's right here. if you can see on the screen. So Mount Pleasant, and it's for 1.5. It's 5 bedrooms, 2 suites. So there's a suite on the top, a suite on the bottom, and we just went through the numbers. What do you think?
And then three more bedrooms, the two suites, three bedrooms.
It's 5 bedrooms in total.
How many bath
It's 3 bathrooms.
in Mount Pleasant?
Yeah.
That's pretty good. And did you say for
Yeah.
1.4?
Yeah, it's for 1.4999. And this also, you guys, this is only with 10% down. So I've put the deposit as 10% because now, as of this last year, instead of always needing 20% down on anything that's less than 1.5 million, you don't need that full 20% anymore. You can have 5% on the first 500,000, and then on 500,000 to 1.5, you can put 10% down. So instead of needing 300,000, you need 149,000. And this is also, keep in mind, before I negotiate on the price.
Hmm. Nice.
Right? And so if you rented out the bottom, or sorry, the top for $4,000 a month for the 3 bedrooms, 2 baths, which is reasonable for that location, and it's done up to the nines, like this property, the thing that I love about it, or why I found it personally so appealing was all of the elements to it. Like it has a beautiful like yard, and it also has on the inside all brand new finishings. Like look at that island. Look at all of the brand new like fixtures, that island. It's like really well done. This isn't something that you'd need to put a lot of work into at
Yeah,
all.
when was it built?
1980. So yeah, they redid it. Like this is definitely a refresh that they did. Most likely a gut job, but properties in those days had nice large rooms, as we know, and just larger spaces, which is perfect for livability. And then this was all done too, like the other. So yeah, I just really love this one. It has two double car garage. It also has a beautiful like yard, patio, 1, 2, 3, 4, 5 bedrooms in total, and 3 full bathrooms in total.
Whoa.
Yeah, and in Mount, like it's in a beautiful location. So, like I said, if you rented out the top for 4,000 and then you rented out the bottom, like let's say you lived in the bottom, so you can claim it as your primary, so you could get it with only 10% down. Let's say you get a roommate and they pay you $1,200 a month. Do you think that's reasonable? $1,200 a month? Todd, what do you think for one of like a bedroom in that area, in that like with those finishings and everything? Is 1,200 reasonable? Or do you think it'd be
Um, I
less or
mean
more?
it is, but like
With a house and a yard.
you can kind of find suites for around 12 to 1500 rental.
Okay.
Um, yeah, so you wouldn't even have a roommate. But it all depends. That is a newer house though too. So 1200, it's a I mean it's a tiny bit high for me, but it's about market value.
Okay. Yeah. I mean, I mean, for the purpose of this, because what I wanted to showcase is if you bought this place, you rented out the top for 4,000 and you got a roommate for the 2 bedroom on the main floor with that beautiful big patio, and they get access to that full like yard, that patio. They get access to all that brand new kitchen and everything, and a garage. It also includes the garage. Let's say you rented out the other room for 1,200. You are personally paying for your house. You get this full house that's going to appreciate, and you start paying down that, getting equity. You're paying out of pocket $1,486 a month, and you get to own a house.
Do you have a projected value for like let's say 10 years, like increase in equity?
Sure, let's have a look. Let's say the market growth is, even if we say 2%, right? which
What is
is
it now?
well, right now it depends on the area. I'd have to look at the area because
Okay.
yeah, but we've seen everything like up until like 10%, which is crazy for Vancouver. But lately, I would say like I would say overall like 3%, but I want to be conservative, so I'm going to say 2%. Just to be conservative because we don't know where the market's going. But if we're looking at 10 years, usually we do a 5-year term, but I can do 10. So here's on a 10-year. So here's the total ROI. Oh, wait, I got to change this because this has to show that you're making those payments. 1486, let's say. Well, we'll say 1500 just for even. So let's say you pay 1500 a month. Um, but then when you exit the property, so here's the thing. When you exit that property, you're actually going to be getting 3000. So this would be actually be higher. So let me show you what it would look like. In order for me to give you the full ROI, I need to have the numbers actually on par with what it would look like as a rental, you know? So let
Yeah.
me change this to 3000. If you rent it out, 3000 for the bottom, 4000 for the top, furnished. This is what ChatGPT told me for this area, and I sent the photos and everything. So you'd be making like 300 bucks a month, but this is on a 10-year projection. Your total mortgage pay down um, is, 300,000. So the market growth itself is 328,000. And then so your total ROI, because the property is increasing in value, and then also you're paying down the mortgage. So the total ROI based on, and this is a very like conservative number at 2% market growth, then you're looking at a total of just shy of 700,000.
Nice.
Yes.
In 10 years, yeah, it's pretty good. 70,000 a year.
Yeah.
Not bad ROI.
Okay, so here, look at this for a second. If we did look at this as like market growth to actually be like 3%, because that was like on a conservative approach. Now we're looking at 880 in 10 years. So you're making almost a million in like 10 years.
Excellent.
Yeah, with combination of paying down the mortgage, building the asset appreciation and
Does
the
this
equity.
factor in um any like maintenance or any catastrophic?
Yeah, so here, because we didn't go through the whole thing yet, we
Do
were
you
just
also sell insurance with these too, or do you know an insurance person?
yeah, I have put some insurance. Yeah, I have people who do the insurance.
Excellent.
Um, because the tenants need the tenants insurance as well. And there's a lot of variables, but let's just say it's 1500.
For the insurance?
Yeah, let's just say that that's what it is.
Annually.
So utilities. So this is the thing that like I didn't put this in because you would split this with the
Tenants.
tenants pay it, right? So
Yeah.
you don't pay for this. But there's a different strategy, and I don't want to overcomplicate it. If you decided to do it furnished, like what I do is I have my utilities included because I look at what the average utilities are for a year while I'm
Yeah.
living. And then I know I'm like, okay, this is what it is. I, add a little bit more. And then I say, you know what, I can just do a flat fee for you. Most tenants do that. And then you can have that in. And that just helps compensate anything, right? But you can have the tenants just split it. And like I said, you can do 1/3, 2/3, or 1/4, whatever, half, half. You figure that out. And then same with if you decided to do like an Airbnb, for example. Let's say you're living in the basement, but then you decided, you know what, for the summer, I want to do Airbnb, and then you can do that because you own the house and you live in
Yeah.
it. And now
Yeah.
you're actually like making some solid money, right? Um, Condo fees, you don't have any management. So these are the three areas right here, Todd, that I was going to show. So management, let's say you manage it yourself, because once you put management costs in here, everything goes down. Like,
Yeah.
it's just gonna go down. Vacancy, let's say it's vacant.
Nice. This is a good little program.
Yeah, this is what I teach in my Rents to Riches. Come join. We start next week, next Wednesday.
You
Um,
moved to Wednesdays instead of Thursdays?
I moved it to Wednesdays, yeah.
Okay.
Does that not work?
No, it's whatever. It's
Yeah.
just yeah, when we keep changing the date, that's I start missing.
Yeah. Yeah, it used to be Thursdays, but then
Yeah, when we've switched to Sundays and then back to Mondays, that's why I keep missing them. I was like programmed in my mind to, yeah. So I'll have to mark it in my calendar.
because I had a lot of people
Do
who
that right
couldn't make
now.
it to the Thursday sessions, so I decided I would do Wednesdays, like every second Wednesday. Um,
Okay.
yeah, but
Monday.
it's right here. Repairs and vacancy. So, like I said, management costs, doing Airbnb, they can take a hefty 30%. If we're doing corporate rentals, check out my corporate rental. I used to be the corporate rental queen. So I teach people how to do corporate rentals and also Airbnbs, short-term rentals, which are allowable, most likely. I mean, as I'm speaking right now, August 24th, 2026, you know, what we're discussing right now, A, this is not financial advice. B, this is what is current. Things change. And this is
Yeah.
why I always, and this is what I said in the very beginning before I started talking about this, is that markets shift. And I just gave an example of a client who came to me who bought an investment property in 2022 based on the market in 2022. And the biggest
Yeah.
thing is understanding that markets can shift, right? So I always want to set you guys up for success. That's why my numbers are conservative. But furthermore, this is why I do this. Do you think realtors do this? No, not a lot of realtors do this. Do the spreadsheet because it sets you up for success to really be able to see what it is that you're getting yourself into. And furthermore,
Mhm.
we can play with the numbers. Like I did a very conservative approach. I can do like a this is how I think things can be if it's like majorly incredible. Like, right, let's say we did a market growth was 4%, right? This is what we used to put on there. I would always put 2%, but there's been times it's like 4%. Now it's like now you see it's over 1 million ROI, right? But we need to do the different approaches, which
And
is
that's after your interest payments?
yeah,
Wow.
says the mortgage pay down. I put it back down to 2% right now. But let's say it's 3%. Now, yeah. Yeah, because this is the mortgage pay down, but that's including the interest that I put in there for the 3.6. Keep in mind, you guys, that can also change, right? If we go to 4%, for example, let's just play around with the numbers and see what 4% looks like. So 4% interest, right? This is now so at 4%, we are just at a total profit of like just this is break even. Okay, you're breaking even at 4%. So if you have to go in for a mortgage renewal, well, yeah, if you have to go in for a mortgage renewal, just keep in mind.
You do, don't you, every 5 years?
Yeah, but the thing about this is that you can also increase your amortization in a lot of instances. I'm not the lender, so definitely talk with a lender about that. But what I did on one of my properties, just speaking as a investor to investor, is that when the rates went up quite a bit, what I did was I was able to actually increase my amortization a bit because I paid down faster than like if you can do like a accelerated payments. But definitely talk with your lender about that. That's not my area of expertise, but there's ways that you can kind of help offset these costs, if that makes sense. That's the total length of the mortgage. Does that make sense, Todd?
Sure. I'm just looking up the Airbnb market in Mount Pleasant.
Yeah, I'd be
It
curious.
looks like it's a 57% average annual occupancy, with occupancy peaking around 72% in July, falling to about 35 in January.
Yeah, that's why I would do like, shorter term, like, and I would furnish it. So a strong recommendation for the Vancouver market is furnishing your properties because furnished rentals yield higher income. And it's a really good idea to do that. Thanks, guys. Thanks, Leanne. Yeah, so we are nearing the end of the time already. Wow, I wanted to go through the other ones as well, but I mean, we can always continue on next week as well with our um analysis, because the other one that I wanted to show you guys real quick, because I love this. It's nice because you can get, let's say you find someone who's like, I want to get a house, but they're an investor and they have some capital. Let's say they have like 100,000 and they want to have 50% equity in this, or they probably want a little bit more. And if you're able to put down 50,000, then you can get a house and you're just paying like $1,400 a month to live in it. And and then now you're part owner of this house that you can live in and then you can start to leverage that as the years go on to either get like your forever home or something else that you'd want to get, right? It's all about strategy, and you guys know I'm big on that. So the last one I just really quickly wanted to go through with you. We're not going to get to this one, unfortunately, which I loved this one because there was one deal, and then this one is the two bedrooms on Homer Street, and it's a really cute one, and it's for like 749, two beds, two baths. Here we go. Right? It's cute, and it has a really nice curb appeal to it. So this was the second one. I like it because it's all like in purple and white and it's really cute. And it has the two beds and two baths. So it's perfect for if you wanted to get a renter, right? And you could still avoid property transfer taxes with this one. And you can also just put like 5% down on the first 500,000 and then on the remaining balance, 10%. So your overall expenses are like really cheap. And then you can get the tenant in there as well, like the renter, your roommate, right? So I don't have enough time to go through this one, unfortunately. But this one I really want to show you guys real quick. So this one's for 449. It's over on Richard Street, which is like a super beautiful street. I love Richard Street. It's a tree-lined street that's in Yaletown. As you guys know, I'm in Yaletown. Not for long, as I did buy that place up on Burnaby. But here just a really cute tree-lined street called Richard Street, for those of you who don't know. And this is a beautiful one-bedroom condo for 449,000. $449,000. You can get prime real estate. Look at this. How cute is this? It has beautiful interior finishings. It's really cute. It's not massive, but it's like in the heart of Yaletown. And like location is key when we're talking about real estate. As you guys know, I talk about that often. And so this one's just super cute. It has a beautiful view. It has a beautiful balcony. It allows pets. It has just a nice fireplace, open concept, just a beautiful space, nice amenities in this building as well. And just a really good like space where you can start building your equity. There's the room, beautiful views, nicely done, nice curb appeal. Look at that. It's cute, right? So this one, there's the gym, there's the amenities. Yeah, it's a good building. Okay, so this one we analyzed as well. It's a 2002 build, so it's newer, which I also like not new, but like newer than 1950s or 1980s, so it's reasonable. And let's go into the meat and potatoes of it, shall we? So how I analyze these puppies, 449.9. So with this, because it's under 500,000, what does that mean?
I don't know. I think I missed that part.
If it's less than 500,000, you only need to put down 5% if you qualify.
5%.
Yeah, 5%. So look at how much you need. Look at right here. 22,500. That's how much you need to buy this cute little condo in Richard Street. That's going to be beautiful to live in, but then also fantastic to start building your equity and like rent it out if you had to. The overall monthly fees are $19.43 per month. And so I also put in the annual taxes, which was taken directly from the listing. Insurance, let's say it's around 1,000. Condo fees on this one are $316 a month. That's it. And so yeah, let's bring the market growth back down to 3%, just so we're conservative. And so monthly, you guys, your overall payments, including insurance, including condo fees, including property taxes, is $2,478. What do you think it would cost to rent this on a monthly basis? Any ideas? What it would cost to rent this? Probably
No
about,
clue. Why don't you tell us?
I would probably say like at least like 2,600 a month. And so to own it, you're actually paying less to own than you would to 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 rent it. And you only need like $22,000, 500. That's it. I mean, if you have a full-time job and you have like 20 grand, I'd recommend giving this a go. Well, ladies and gentlemen, that's what I'm going to leave you off with for today. We're going to be learning more about this in my Rents to Riches, and it's truly been such a blessing sharing with you all today. Thanks so much for tuning in, and we're going to see you guys next week as well. I am going to be extending the Rents to Riches to next Wednesday because we were going to start this Wednesday, but we're going to start after the long weekend as well. So make sure to join the chat. And once again, make sure to check out our YouTube channel, like and subscribe, and we will see you next Monday. Bye.